all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
One, two. Good afternoon, ladies and gentlemen. Welcome back. One, two. So, gold formed a nice bear flag pattern. I entered into long position quickly and aiming for, that 50 pips, 60 pips, not too much. No, even less than that. How much is that?
Hey, Thomas.
46, 30, 40 pips. Good afternoon. So, this bear flag pattern, until it breaks, we can use the bottom as a support, as a guide for its stop loss. So I entered into a very, very tight long position, and I'm going to take profit probably if it reaches the previous high, which, isn't that big in terms of risk ratio, but 30, 40 pips. It's not too bad, is it? Because we have a very shitty week, lack of data. Yesterday was a big move, but we want some more. We want more data, more fundamentals. And today we're going to have jobless claims. Which hopefully is going to bring us some wins. How are you doing today?
I'm good. How are you, Thomas?
Yeah, slowly we're getting into the shitty summer season, trading season. So we're going to see less liquidity, less market movements. August is going to be definitely painful. So be prepared. Yep, long position going so far so well.
At next week's FOMC speech, it's kind of figured that it's going to be a pause in the rate hikes. But every time that Powell speaks, it's usually like a drop in the market. So what do you think the pause would be? Would you think it would be bullish or bearish?
It depends on what he has to say. Completely depends what he has to say.
Yeah, that's what I was thinking.
Yeah, it all comes down to what data are we going to see. Hold on. See you, ragazzi bacci. Jó, hát oda... Hát most nem tudunk egyikünk se jönni, tehát akkor jöjjenek ide Móra Franc 9-hez. Mert... Hát de baszhatják, mert nem szóltak, tehát ilyen nincsen, hogy csak oda jönnek vízolát cserélni. Jó, szívási oda tudja adni neki a telefont? Megkérem. Ne, csak... Jó. Jó, köszönöm, arra úgy csak dolgozok, mert nem tudtam. Oké. Jó, oké, köszönöm szépen, szia. Hello. Jó. Hát elvileg a héten készül el a lemez, és akkor jönnek, de azokról sem tudok semmit, mert az eső, elmosta őket az eső. Ja, nem tudom, nem beszéltem még vele. Nem. Okay, hello. Do apologize. So, where were we? So we talked about the FOMC meeting next week, right? Hello?
Hello, radio silence. Yeah, no, she was busy explaining about the possible implications of that.
Yes. So, we continue to see inflationary data. So that is going to definitely affect the tone next week and the possible outcome of the FOMC meeting minutes. Now, if we see, it's a bit too early to talk about this, but what I'm expecting is a quite boring week this week. There's not much data happening around. And next week, if we see, let's see, what do we have in the economic calendar? It's quite dry this week. There's not many things happening. So today is going to be jobless claims. Now, jobless claims is important because it's labor market data. So if we see, I already marked it on the chart for your convenience. If we see on the chart on the labor market data, jobless claims, a lower jobless claim number, that is going to be very inflationary, because a low jobless claims number means that the economy is still overheating, jobs being created, salaries being paid, and salaries being spent. So it's inflationary. Now, if we see a higher jobless claims number, that signals a cooling economy, because more people is entering into unemployment. And by the way, I'm still holding the long position, and I'm using around 1944 as a stop loss and aiming for the previous high. It's not much, I know it's about 30 pips, but it's more than nothing. So going back to the fundamentals, if we see a higher jobless claims number, that is going to be very deflationary, and gold is going to continue a little bit higher, because there will be relief that the Fed won't have to keep interest rate high and even don't have to raise interest rate. Because remember that this week we had two surprises. Bank of Australia, Royal Bank of Australia increased interest rate this week. Am I right, Ferdy? How much did they increase with? By?
Sorry, Thomas, I was stepping out there. So you were asking what? I didn't follow.
Royal Bank of Australia increased interest rate this week. Am I right?
Yeah.
Should have been on Monday.
Yeah, it was on Monday. Yeah.
Or Sunday evening. Oh, there you go. Interest rate decision. It was Tuesday morning, Monday evening. So they delivered a 25 basis point increase. And shortly after, on Wednesday, yesterday, Bank of Canada surprised the markets with a 25 basis point interest rate increase. And that was, ladies and gentlemen, that was the 300 pip drop yesterday. It wasn't liquidity grab or, anything, any magic. It wasn't magic. It was pure economics. The higher the interest rate, the lower gold is going to drop. And the reason why gold dropped so hard yesterday is because it reignited the fears of interest rate decisions, interest rate increases. And the reaction of the market was simply a fear. And you can see that gold is slowly going back into that area, that zone, where the drop started, because it's retracing. But long story short, what happened with the interest rate increase is it surprised markets, because everyone thought that, oh shit, the interest rate increases now stopped, and it didn't stop, because the Fed was very clear about it, that we still have high inflation. then more rate hikes are necessary, or keep the existing high rates, longer term, because they need to fight inflation. Remember that the banking crisis issue is out of the way. The debt ceiling story is solved now because they raised the debt ceiling. So everything else is out of the way, the big stories, and now the market is coming back into the inflation worries, which is a problem, but it's good for us because we continuously seeing inflationary data, which is going to be bearish for gold. Now the question is, where should we enter? And after yesterday's surprise interest rate increase by Bank of Canada, which has led to this beautiful 300 pip drop, confirmed the direction, because you can see that the consolidation right here, let me just color it a little bit so you see a bit better. You can see that this consolidation was broken at the 1956 price level. And what it means, it confirmed the direction, and also the narrative of the market was an immediate sell-off, immediate fear, which is good. And now price is retracing back because every impulse move is followed by a retracement. And we have tools to identify. So when you look at the naked charts, this is all you see. This is all you see. Ignore the pivots, but what you see here is when you start adding things like, marking the consolidations, marking the impulse moves. So you see we have the consolidation right here. This is a range move, and what happened is price went out to the upside. That was a fake out, and at 4 o'clock sharp, Bank of Canada raised interest rate 25 basis points, which was a surprise, and it has led to a 300 pip move to the downside. A very big impulse move, very impulse move, and we have the direction. And now you can see that the bear flag, gold is slowly going up the stairs, and it will come down the escalator. And what it means is that it's retracing. And when you start with a naked chart, you don't really see many things. But let's look at the confirmations. If you missed this big move, that where should you enter into a sell if the data is going to be inflationary today? Remember that today we have what do we have today? We have jobless claims in 23 minutes. It's time to do some analysis. Quickly, just have a look on the position that I entered in the gold. It's going very, very well. Why is my stop loss so tight and wide? And yeah, it's going so well. 10 pips. Not aiming for 100 pips or 200 pips today. Just the previous high, for example, or a little bit higher. So it's going to be around 33 pips. Now 30 pips a day keeps the 9 to 5 away. Going back into trading view, what we have to do is let's count the confirmations for our sell zone, because the bias is a sell. Yesterday the market confirmed the direction, which was a sell, because Bank of Canada as well increased interest rate. So what we have, or actually you can help me guys, how many confirmations can you count? So first we have the consolidation, right? And that consolidation gives us a very nice support level somewhere around here at 1958, right? So that's one confirmation. We broke the support, and now it's aiming for a retest. And that support surprisingly lines up with the weekly pivot at 1955. And that pivot lines up with the 50% Fibonacci, guys. So everything is pointing to the direction that we have a very beautiful zone, which is good for sell. And surprisingly, look at gold, it's already edging higher and higher, because this area of interest, this one right here, where we have a cluster of confirmations that price is going to sell off, it sucks up like a magnet, attracts it. Let's have a look on the open position. Yeah, it's going up very nicely. So the area of interest starts from around even 1950, because that's where you have the pivot. So that is the first sell zone. So I would advise everyone, just to take partials, which I'm going to do now, because we are very close to the daily pivot. And also higher, just above a little bit higher daily pivot, we have the 38.2 Fibonacci, we have the support and resistance. So, you know, many confirmations that this is going to be our sell zone, or what it looks like to be a sell zone. And we have 20 minutes until the jobless claims, and I already explained to you that a lower jobless claims number is inflationary, because, you know, the many jobs being still created in the economy, all the excess unemployment is being sucked up by the labor market, by the jobs market. And so if you have a lower jobless claims number, gold is going to sell off. If you have a higher jobless claims, gold may continue a little bit higher, but you have to look at the big picture, because it's not as easy as just to look at a number, whether it's higher or lower. You have to look at how high is the jobless claims right now. Now, who can tell me, are we experiencing like a crisis now? Is that high, how high the jobless claims are? It's not that high, is it? During the Yeah, during the COVID, yes, there was a spike, but since 2008, even 2009 was actually, the jobless claims were much higher. So we're back to the 1970s level. I mean, look at the chart. Can you see the line that's moving, that blue line? So this one right here was back in freaking 1973. So the jobless claims, the last time this low, were back 50 years ago. So we are experiencing a very tight labor market, ladies and gentlemen. And don't forget to take some profit. I'm going to delete this position because we have less than 20 minutes until the jobless claims number. So let me show you.
Hello, Thomas.
Hey, number one.
Number one, all is good?
We have two possible entries if we're going to see a lower jobless claims number. And let me just highlight this. You can start preparing for sell soon, because gold has run out of craft. All positions now closed, and be preparing for a lower jobless claims number. Well, a not that high jobless claims number. I think the jobless claims number is going to be, even if it's a little bit higher, it's still too strong. I just show you that jobless claims is 53 years low. Look at this, 53 years ago we had this low jobless claims number. So, any questions? No questions. Excellent. So now we have.
Thomas, I assume you out of your NAS short, eh? Or you still?
No, I closed it down in the morning.
NAS?
Close it down in the morning. Well, let's have a quick look on Nasdaq. Yeah, it took me out. It hit my stop loss.
Okay.
It's looking good for short now.
Yeah, I'm already in one since that's started to fall now again. So yeah.
David James, tips for holding position longer, Thomas. Never hold my position longer than my TP like gold. My TP is like 1 to 3, but so many times I could have 1 to 10. Mate, just if you make any profit, be happy with it. So overall, people asking whether it's a sell or a buy. Since we are almost 15 minutes into jobless claims, I will be looking for a sell opportunity. The reason for that is because if you look at the overall picture, US economy is continuing to print inflationary data. And for this reason, the inflation narrative came back into the story, into the market perception, market sentiment. And yesterday we had a very inflationary news. Bank of Canada raised interest rate 25 basis points, which was a surprise. US Treasury yields on the short end of the yield curve are edging higher and higher. You can see how nicely since beginning of 2022 it's been from 0 to 5% all the way. Someone asked me to look at NAS. So look at US 30. Now US stocks been just all over the place. 2 weeks ago had some nice trades on US 30, but since that it just stop loss hit. Nasdaq, I would wait for the data to come out and then the New York Open. Let's have a look on lapels. Yeah, we have today's high at 1949, so we have already a high. Yesterday's session low lines up with the 8 EMA 1954. You see this area, which I marked as a potential sell zone, has many confirmations. And now it just had a look at lapel's key indicator, key level indicator, and you can see that we have the fast EMA, which is 8. We have the weekly pivot. We have the Fibonacci 38.2. So many things pointing into the direction that it's going to be a nice juicy sell, or there is confirmation to for sells.
Good afternoon, everyone. Hi, Thomas.
Good afternoon, Bram. How are you doing?
Oh, great. Glad to
Very
be
good.
very good. Attending a live for a change.
Yay. Very good, my friend. What stop loss for a sell? Motius Mapin is asking. It depends on the data, brother. Maybe we're going to have a buy the news sell the fact type of scenario if you have conflicting data, because you know we have two different data, initial and continuing jobless claims. Sometimes it contradicts each other, which could lead into buy the news sell the fact scenario, or vice versa. What should be the stop loss? I think about 1956 should be sufficient, because if it comes any higher than 1956, it will come back, price will come back into this consolidation zone, which it can then go all the way up to 1966. So I wouldn't keep any higher than that, the stop loss. Do I have any open positions? No, I closed it down because I entered with a significantly higher lot. Just scalping this bear flag because I wanted price to come up to 1949. But because we are so close to the jobless claims, it's only 10 minutes, I logged in the profit. It was on like 11 or 12 pips. It was 17 or 18 pips, but it pulled back. And I decided to just book the profit because I opened a 100 lot, which is just a quick scalp with a very, very tight stop loss.
Quick question.
Yep.
Does it make any difference if you trade in lower time frames when the market is so slow?
Yes, because on lower time frames you can identify, for example, these this bear flag is a perfect example, and even though this range isn't very wide, it's still how many pips? I think it's about 30 pips. Yeah, 60 pips. So on a higher time frame this would be seen as a very small movement, but in a lower time frame it's a much bigger movement, yet it's only 59 pips. But you can't see this on a higher time frame.
Okay. Thanks, mate.
We have 8 minutes until jobless claims. Those who watching the stream on YouTube, hit the thumbs up button, please. Hit the like. Oh no, you can see it from here. So if you have two potential sell entries, either now could be a good opportunity. It looks like that gold has run out of juice, which is the other reason I closed down the long position. And if we have inflationary data, most likely gold is going to continue further down. Or the second entry, which is just lining up with the weekly pivot, is at the support level, which was a support, now became a resistance, Fibonacci 50%, so the usual technicalities. So now, because we are close to the data, and I'm expecting a not that high number, so even if it's higher, I think the market is now aiming for or pricing in the narrative of the inflationary story again. So what I'm going to do is I'm going to enter with 4 lots into sell. TIS, hey guys, literally woke up, jobless claims in 8 minutes. Yes. Yes. If the quickly you woke up, I'm summarizing it for you. If you have a lower number on jobless claims that is very inflationary, which is coming up in 6 minutes, that's going to push down gold immediately. If you have a very, very low number. If you have a higher number or slightly, yeah, if you have a higher number, significantly higher, then it's going to continue a little bit higher. So people asking for my open position. I entered into a small sell, but this is a wider stop loss. So the maximum I can lose is 900 pounds. And the maximum I can gain, if it lines up with my analysis or my TP, is around 3,000, 3,500. So definitely 1930 is my target. And we have to stay, below the current price level. And also we have to see a significantly lower number in order for this position to be successful. Going back to trading view. Four minutes until Jobless claims. It's a very dark hip hop. So depending on the data which is about to come out, if we have a higher jobless claims number, price is going to continue higher. Lower number means price is going to immediately sell off. So we have two different sell entries, and now because we are close to the data, just waiting. And I am, yes, still holding a position, but I have a wider stop loss because I entered with a smaller lot size. Mm -mm -mm. 3 minutes. And this is no longer relevant because now price moved up a little bit higher. So we have now a new sell level, which is going to be, could be, the daily pivot. Two minutes, 50 seconds. And when I see the data coming out, I'm going to enter with a bigger lot size, depending on the outcome. And you can see on the chart, read the notes on the right. It's simplistic, loads of preparation has went in, and I try to simplify as much as possible for your convenience. If you have a lower jobless claim number, it's, you're welcome, brother. It's sometimes the simple things can bring you the best results. Okay, now price came back to the top of the bear flag pattern, and also just below massaging, tickling the daily pivot. We have 1 minute 45 seconds until the jobless claims. If you see the jobless claims, just shout out whether it's higher or lower, okay?
Place your position.
Place your bets.
Get your wife's or husband's credit card, because data is coming up in 1 minute, baby. Oh yeah.
I already did. I placed my bet. I placed my bet. Wagwan.
Wagwan, bitches.
Take those kidneys out.
45 seconds. Dubakorefix says it's gambling time. No, date, no, brother, because we know exactly that if we have a lower jobless claim number, then we have to sell. If you have a high number, then we have to buy. I explained it to you. If you read the notes, you will understand. We don't gamble here. I trade based on economic data. And not
Only
gambling.
kurvas gamble.
Yeah, only kurvas gamble. 18 seconds, ladies and gentlemen. 18 seconds. And we have 7, 6, 5, 4, 3, 2, 1. And the jobless claims is coming out. Where is the jobless claims? Gold just shoot up a little bit. Jobless claims data hasn't come out yet on my screen. Now price is at a daily pivot. Where's the data? Can you see the data? It's a little bit lower, but initial is higher. According to chart, we have a higher jobless claims number, which is slightly inflationary, but on the continuing side, we have a lower number, so the data is contradicting. Let's wait until price comes a little bit higher and see how is it going to react to the weekly pivot. I'm still aiming for a sell. Let's have a look. Not entering into any position just now. Waiting because the data was quite deflationary with a...
How much is 261? 261.
Yeah, thank you. I saw it. So it's significantly higher than the forecast and also than the previous one, which is gold is going up because it is deflationary. More people entered into unemployment. I didn't catch the buy, so I'm waiting to see how the market is going to react to this sell zone right here. But fortunately, it's quite deflationary data. Okay. Just touched the weekly pivot. Let's see how is it going to react. So, if you feel adventurous, you can try a sell on the weekly pivot at this price level. What do you think? Should we enter into a sell? Because this was the second mark price level. Yes, enter into a sell. Stop loss 1956, around that area, depending on your position size. I don't know your position or circumstances, so it's up to you. Raul Genotra, hahaha, whatever the data come, price has to go upside. If you say so, brother, but my target is done. Well done. Okay, now I'm running in 18 pips so far.
Good entry there.
Sorry? What's that, Ferdy?
It's a good entry. Good entry there in the pivot.
That was the pivot and the second sell zone. Is no guarantee that price is going to massively drop because we had quite a deflationary data with the increasing number of jobless claims. Yet the continuing jobless claims didn't increase that much, Actually, it was lower than expected. So it's quite mixed data, yet the market reacted immediately to the surprised initial jobless claims. Now this is a big surprise because it's almost 10% difference or standard deviation. We have no other data today, so it's going to be quite a struggle from now on. Even though we have New York Open coming up in when? In 1 hour. Gordon Paul says 1925 is coming. I wish that, brother. 1930, even 1945, I would be more than satisfied, more than happy. But chances aren't that big because we had this quite deflationary data, sorry.
But I'm a bit confused if it's a deflationary data. Isn't it supposed gold to shoot up?
It is, but if you look at it, if you look at the big picture, so exactly what we discussed at the beginning, it is a bit deflationary data, but the problem is one data isn't going to change the big picture, because if you look at the initial jobless claims, like now, 232, it isn't. Let me just refresh because that's last month. No, it hasn't refreshed yet. But if you look at the big picture, that data is very insignificant compared to the last time when we had this low data was back in 1973. So I think it's a buy the news, sell the fact kind of scenario. Victoriously suck my balls. So this one stop loss hit. Yeah. And new other data. So still massaging the weekly pivot, and we have multiple confirmations at this price level. Question is that, is the market going to take in the narrative that it is deflationary data because we have the higher jobs number, and it's going to continue much higher? But I strongly believe that it won't go any further than 1956, 1957. If it goes back to this range, then it's going to start ranging again, but it won't go any higher than that. Oh, Rahul Ganatra, you're getting very boring now. Now we're back into the range. So this is the range where I don't want to enter into any sells if it continues any higher, because chances are big that it's going to start ranging again. And it's past the weekly pivot.
I think it's gonna reach 61.
What makes you think that? 61 is quite, yeah, that's the R1 on the pivot. I'm entering into another cell. I'm placing stop loss just at around 50, 57 and a half, 50, let's call it 58. Aiming for, you know, the weekly pivot. I don't think it's going to drop any further than that, but you know, if it does, then happy days. The problem is the data today was quite inflationary. But that said, when you look at the big picture, just because we had this surprise to the upside on jobless claims, which is inflationary, but is still not enough to break down the wage inflation. I mean, if you look at the data, yes, there are some outliers, some big ups and downs, but generally speaking, look at the last time we had this low jobless claims number, or this high jobless numbers back in 1973. So the big picture tells that it's still, you know, inflation is a problem, and one data isn't going to make or break anything apart from my stop loss. Now gold is edging higher back into this consolidation area, so it's not a stop loss hit, and this is the area where I'm not going to enter into any cells, because now we're back into the consolidation range.
I believe the drop yesterday was caused by fundamentals, and now it's back to where it's supposed to be going.
Thomas, I just looked again at this data, the initial jobless claim, and if you click there and you look for the whole year, it's like one of the highest number. Like it's increasing. Like to me, this is deflationary. What they are aiming for, a high unemployment. If you look for the whole year, there is only one number, 264 on May 11th.
In May 11th, yeah.
Higher than 261. Everything else until January, it's way lower than 261.
Yeah, it's increasing not every single week, but you can see that the numbers are increasing, which it could be because, you know, companies let employees go due to the high interest rate environment, investing less in capital expansion and capital projects, and also because they know that there are some tough times coming.
Maybe for the moment it was interpreted like as a deflationary. I mean, this is what Fed wants.
Hi, Thomas. Just
Hi, George.
Thomas, I've been having a little problem with the morning briefing. I live in the United States, and the time kind of confuses me. So
Mhm.
is it sometimes I see like, for example, 2:30? Is it Eastern European time, or sometimes
Yes,
I kind
yes,
of mix
yes.
it with the
2:30.
time in America? So is it like
Cent-
Eastern European time?
Central European time, yes.
Oh, so it's like six hours. Okay. Okay,
Mhm.
Central
Something
European
like that.
time.
Yeah,
Thank
but
you.
you know you can watch the recording
Okay.
on a website. Did you know that you can watch the recording on a website? George? George? Georgie? You go to the website, you go to learning, go to weekly webinars, and you can watch every morning briefing. Okay? God, I missed this beautiful buy, and I got caught up in the cells.
You're not the only one.
God damn it.
Yeah, it hit my stop loss as well.
It's no good.
What do we have tomorrow?
Nothing, Thomas, nothing.
Damn it, it's absolutely dry.
What do you know, at least to ask you if you know what means this speculative net positions? What means speculative?
Speculative means it could be, you know, taking risk positions. So it's not hedging, it's the other one of the hedging. So traders on the professional markets can either speculate or hedge. Speculate under the price is going into one direction or the other. Or they can hedge a portfolio, for example. The bond portfolio, they can hedge against any interest rate increases or decreases. So speculative position is risk-taking position.
But I mean in the invest in the economical calendar for tomorrow. I mean.
Oh, the news, the speculative
Ah, yeah. Which is... What was that?
For tomorrow.
Friday afternoon.
It's the contract. I think it's a futures contract for speculative net positions, but you can see the Nasdaq, so it's the futures commitment of traders, the COT report.
Okay, I was just curious. I saw this naming speculative positions, and I'm like, what they're talking about?
The COD data, yeah. Look at that. Now we have this area of rejection, or slowly started to rejection, the consolidation area. So it looks like that now the price or the market is a buy the news and sell the fact. It's bought the news because yes, today was quite a deflationary data. If you look at the jobless claims number, so it was a bigger surprise, the highest number as mentioned by Stoyan this year. But if you look at the overall data, it's insignificant compared to how high the inflation is in the US. If price stays under 1956, then it will revisit 1930. because we have a strong support and resistance, and also it's going to be a confirmation that it was a buy the news and sell the fact type of scenario. Right now, the pump on gold was quite a strong impulsive reaction from the market as buy the news, because it was a deflationary data. But question is the market going to eat this long term? Because we know exactly that one data isn't going to change or make any difference. And we still have next week, which is going to be more exciting in terms of monetary news and fundamentals and economics, because we are going to have the FOMC interest rate decision. And this week, central bankers of the world already delivered 2 surprise rate hikes. Royal Bank of Australia and Bank of Canada. Let's have a look on lapels. 8 EMA. Question is that how long is this rejection going to keep up? If it stays below this price level, then I would aim for a sell still. Is the buy and use and sell the fact type of scenario? We can use the R1.
How is the bond market?
Let's have a look on the yields, but I'm guessing by the reaction of gold, yields have dropped significantly, yes. But if you look at the yields, it's still in an upward trend. So it hasn't broke this trend line yet. It just bounced back from the weekly pivot. So it is, for me, it's a clear sell. You know, there were a few stop loss hits, but overall, the market so far reacted impulsively to the initial jobless claims number, which was deflationary. But if you logically think that number has to be way higher in order for the Fed to deter from keeping the current interest rate increase at this price level.
Hi, Thomas. Hi, everybody. Long
Hey,
time.
how you doing? Beautiful.
I'm good. Oh, thank you. I'm good, thank you. How's everybody?
Could be better. It's a shitty month.
It really isn't. It's been slow. I've just taken a back seat for a little while, but I'm back now.
That's good. I'm waiting for next week FOMC meeting. That is going to be really that's going to be an eventful week. Any update on GJ? Let's have a look on Japanese yen. We had a good trade on GJ. I think you can carry on continuing buying GJ. Most people would sell at this price level, but we know exactly that the interest rate differential between the two countries is going to be further widening, because the UK has again 50 years the highest inflation. So yeah, GJ is a good entry for long. Everything is pointing to that direction, and actually that is a good position. Let me send that to the team. And how is the gold sell doing?
Amas, comeback is real.
Pardon?
Comeback is real. The gold.
What's that?
Comeback is real.
Come back.
Going
nicely.
Comeback is real.
Come back. Come back. Oh fuck, I posted the wrong link. Gold will come back to 46, 43 area. Yes, that's what I'm aiming for. 43 would be very nice. I mean, 43 is down somewhere around this price level, so that would mean a beautiful 120 pips. Yeah, I'm aiming for 100 and... Yeah, somewhere around this price level. We have 4 minutes until a new 4-hour candle. And 34 minutes until New York Stock Exchange to open. That's it, I'm out from the position at a tighter stop loss. And that's it for me today, guys, unfortunately. Ajit Verma is asking, please tell me sell. If price comes back below this price level, so let me just mark it for you. So if price comes back below this red rectangle, then it's going to be a sell. And another day, another stop loss hit. Guys, unfortunately, isn't my day. Hopefully tomorrow is going to be a better day, but it's not many data tomorrow. Absolutely nothing. I have no luck this week. But next week we're going to have the FOMC interest rate decision. So I think I'm going to call it a week now, because it's just an absolute shitstorm for me in terms of profits. It's one of those weeks. You can't win every single week. So I'm going to call it a day now, not entering into any other sells, even though I'm still expecting, you know, price to be slapped down. I wish everyone a good day.
You still have our love.
Pardon?
You still have our love.
Oh, thank you so much, brother. Well, you know, it's one of those weeks. Thank you. It's one of those weeks when, you know, I made loss, which isn't something that it's convenient to admit, but, you know, fortunately isn't a common thing that, you know, I have 1 week of losses. But anyway, thank you so much, guys. Hopefully next week is going to be much better. Remember that next week is going to be FOMC interest rate decision, which is my expertise on macroeconomics. So thank you so much, guys, and I wish you a good weekend. See you soon. This
Thank
is
you,
the
Thomas.
After
Thank you,
Have a
Thomas.
good weekend. Have a good
Bye-bye.
weekend to everyone.
We win some, we lose some.
Cheers.
Bye.
Thank you.
Have a good weekend.